This is the Domain Magnate Show, where you'll learn everything you need to know about buying, optimizing, and selling online businesses with your host, Michael Beroslavsky.
Welcome, podcast listeners. Today we have Mike Michelini joining us to discuss his sale and transition to a different role. Hello, Mike.
Hi, Michael. How's it going?
It's good. So tell us first, then people ask you, what do you do? What do you respond?
I'm a creative person, but e-commerce, cross-border business between Asia and the overseas market is usually the quick answer.
Nice. So you've had an FBA business. Can you tell me when did you start it and how big did it get?
Sure. So I was actually doing e-commerce before Amazon was so big, but for this one, it was Sissetonel is the brand. We started on my podcast, on my blog. We started it in 2017, about April. And basically we grew it up just about 2 years, sold it for 6 figures.
Nice. And I understand that with that sale, you also transitioned to a new role with the company that acquired it. Can you tell us about that?
Sure. So part of the deal, we had a few partners in Sissetonel with the coffee accessories, and everyone else, of course, was a pure play investor, cash or equity option. I took equity and I joined on as an active partner at Alpha Rock Capital, where I'm biz dev and content creating.
Was that the first time that you took a job, that you took a position in another company, or have you had like traditional jobs before?
My first job was out of college. I thought I had to do the job before I could start my own business. I worked on Wall Street, Deutsche Bank from 2003 to 2007. And then basically I guess since then, this has been on my own. But, I guess I'm an employee, but I'm a shareholder, partner. But yeah, it's basically maybe the first time since back in the US.
And so how did you decide to sell the business? Why did you decide to sell it?
Sure. So I think it was a plan from maybe even the beginning with starting the brand. It was a case study on the podcast to start something with the community. And there was a few factors. Actually, I even wrote a book about it. I called it the eCommerce Gladiator. It was a part of the podcast sub-series. But honestly, I think there was a couple of reasons. One reason was I got to become too actively managing it. We went through a couple of CEOs through doing it. I was more just like now, I'm the content creator, I'm the blogger, I'm the biz dev connector. We had some turnover with our CEO or our active partner, and there was also a great opportunity at Alpha Rock. Actually, Alpha Rock was a shareholder in the brand. I had known Mark and the other partners since Alpha Rock existed, and we were always talking about working together. They were also on my email list, and they were following the journey, and so it just looked like it made more sense to join forces with the current management. And scalability, I think with your fund too, is sometimes when you do one on your own with one single operator. I know there's lots of listeners and lots of people, in Chiang Mai and Asia around the world that are single owner operator businesses. Of course, I have my VA and my team, but I really believe in the ability to roll up and scale, and especially Amazon FBA, but like you do content sites, I think scale is where the real leverage is.
Yeah, absolutely. And so we often talk about negotiations and about deal making on this show. And I understand you cannot share many details, but I'm curious to learn about how the deal was negotiated. So you received some equity and probably some cash. And how long did the negotiation process take, or how was it kind of discussed?
So honestly, since Mark joined Sissetonel, he was already doing his other Amazon businesses, and the idea was even brought up the year before, honestly. I don't think that's normal, of course, probably for most cases, but it kept getting brought up more often. I think it really only was really intense discussion for 2 or 3 weeks in July of this year with all the partners, with the different negotiations of how much cash or equity, and then the conversions and the valuation, the multiple, the terms. But I would say maybe really just a few weeks. I think that's one of the nice things about Amazon FBA, maybe also with your side too, but we're really just looking at the Amazon data. You can audit pretty easily by logging into the Amazon Seller Central, We actually use a third-party tool called sellerboard.com, which is a paid service where we just basically say, sign up for Sellerboard, sync the data, share it, and then you can see the revenue, you can see the Amazon costs. Basically, then you have your SDE. Of course, you have to know the product supplier costs, but you look at the invoices, you get an idea of maybe some of the other fees. That's kind of what a lot of investors like about Amazon is it's pretty transparent and vanilla for the books.
Yeah, it's more straightforward than most businesses for sure. And so what is your role now at Alpha Rock Capital? And tell us also a little about Alpha Rock Capital.
Sure. So, I'm doing what I like to do, content creation. We did a webinar yesterday for current investors so they could see more of what was happening inside the business. I also have a podcast there where we could get you on. I'm doing a couple of different email newsletters, funnels. I'm still helping with the Amazon brands, advising and strategizing on content and the marketing and conversions, as well as I bring in both tools for us to use in the Amazon side or new team members, new investors, like business development. And then about Alpha Rock Capital, it's a U.S. registered, I don't think I can say fund. We're filing still with the SEC to be formally a fund. We're calling ourselves an acquisitions firm for Amazon FBA companies. And what we do is we raise money to buy more brands. And right now we're doing all at one top level holding company structure in the Delaware. And then we have a registered back office in Manila, Philippines, where the majority of the team is operating. We have a studio there for the content with Virtuous Graphics, which we bought. And we also have our investment side there. So there's about 35 people in Manila. And that's the quick one.
And how does it work from the investor side? Like, what is the minimum contribution, or can you tell us about the equity profit share model?
Sure. So we could go lower, but I think there's paperwork. So we usually try to do a minimum of 50,000 US. There has been some exceptions to that if there's some strategic purposes or if they want to maybe start smaller. But there is an accredited investor requirement if you're a US person. If you're non-US, it's much easier. I think you might know that too. And then the way we do is monthly reports, which we're actually trying to do with these kind of like live webinars for investors only, so they can talk to the partners, they can ask questions. We're trying to be as transparent as we can. There's no dividends. I know some investors and potential investors want cash flow from it because it is a cash flow business, but we've decided to roll everything back into growth or future acquisitions. And the exit strategy is we're planning to do a sale of the whole fund to a larger fund in a few years and cash out. But the investors will always be a minority. We're also opening up a Slack group totally dedicated for the investors to ask questions and know and be transparent. And that's the current structure. But yeah, there are a lot of people that do want dividends, and we maybe have lost some opportunity, but we've stuck with our strategy of using that to reinvest back into acquisition.
Yeah, sounds good. And how many investors do you have now? How many have you accepted?
Sure. So we've raised 1.4 million US right now, and we have 12 to 15 investors total. Of course, they're spread out around the world, Asia, Europe, US mainly. And then we have 10 brands under Amazon.
And sounds good. So does Alpha Rock only focus on FBA and Amazon businesses, or do you also do some other acquisitions?
We did one affiliate site, honestly, but it's not our strength. It's a different type of work. So we actually recently sold that just to focus purely on Amazon. I think you might agree. I think that's where the value can be had for the investors or for the fund, is having a core strength and due diligence and deal sourcing and everything.
Yeah, you have to have the focus, and then you can develop advantages around a specific type of business. That's what we've learned as well. That's why we primarily focus on content sites. So how do you guys do due diligence when it comes? You probably review many different Amazon brands and businesses to buy. Do you have some criteria that you can share?
Sure. I think the easiest is what we don't buy. We don't buy like supplements, electronics, fast fashion, like trends.
So like short-term businesses, basically.
Yeah, because nobody in our team is an industry expert in those. Plus, the other reason is those also have a lot of black hat sellers that do whatever it takes to get to the top of Amazon. So usually in the more boring, evergreen kind of home and gift and garden kind of is where we're at. You know, like my brand I brought into the team was coffee pots, coffee accessories. It's always tricky with Amazon. I can't share the exact niches, but you know, like kind of the boring stuff. Actually, that's what Mark, the president of the company, says. We like the boring stuff that makes money.
Yeah, we like the boring stuff too. Going into highly competitive niches is very different.
Yeah.
Yeah, it's high risk, yeah.
And then basically we do a lot. We do buy a lot, of course, off Empire Flippers. We have some other brokers. We're also not going too big. That's another thing I should bring up. We're buying it to 200,000 to 1 million valuation range with 2 to 3 times yearly STE. And we do that because we feel the private equity and the bigger investors are going $1 million plus. So we want to kind of go in a smaller side.
So do you mostly just buy from brokers, buy existing deals, or do you also try to find some private deals?
We are learning how to do our own deal flow. It makes some of our brokers nervous, but I guess, of course, that's always a competitive advantage. You know, that's why we're starting to put out some content and trying to get more active in the community. But I would say over 75% has been through brokers. I've been also trying to bring in some deal flow, but it's trickier. I feel like it's riskier. I feel like the broker does kind of vet a lot of these people, because I've talked to people like, oh, I want to sell my Amazon business. You want to invest because they hear about it and they want me to buy it. And then I look at it and, you know, it takes a lot of time. But of course, we want to try to grow that and consider that. But for right now, we're primarily buying through brokers.
Cool, sounds good. So what kind of advice do you have for people who are looking to sell the Amazon business or considering to sell the Amazon business?
I guess there's a few things to think about. Maybe why you want to sell. You know, obviously buyers always ask why. You should have your answer ready and hopefully be consistent and hopefully be honest. But I don't think there's anything wrong with saying, you know, you've grown to a certain level and you're kind of bored. I don't think we mind at Alpha Rock if people say they just want to start they want to just. There's a lot of sellers that just like the beginning, right? The entrepreneurial hustle. So that could be a reason. So just have some reason of why. I think try to show some opportunity for improvements. I think I even read that on one of your pieces of content. But yeah, of course, a buyer wants to see what they can fix. What's their opportunity for upside? So, you know, I've noticed that a lot with the good sellers. They say, oh, I didn't do good on this. This would be a good way to improve the business. So this would be a good way. Of course, having your financials, but honestly, we don't really dig into like your hotel fees and your airplane fees. That's after what we care about. We do asset buys. We're not buying your liabilities. You know, you don't got to worry about that side especially, but definitely try to have a brand. We want to buy brands. I mean, we have bought some that are just listings and ASINs, but we, of course, always like to buy one brand registry, a U.S. trademark. We're in the U.S., so U.S. trademarks. I think those are the key ones. But I think showing some kind of opportunity for growth, try to sell when there's a little bit, at least flat or up a little bit. Obviously, you would agree you don't want to show a downward start trend. So probably sell into some strength. And also you got to prepare for it, you know, at least 6 months, I would say. A lot of people say a year, but I think you don't need to wait a year or think about it for a year. But don't go too crazy if you're trying to sell. Don't cut your costs so much, you know, because you still want to operate the business and keep it profitable.
Yeah, good advice. So prepare up front, get your numbers, be honest, be upfront about things and show some opportunities. And from your side, then you buy these Amazon businesses. Where do you try to improve it? What are the advantages that you bring to the table to be able to manage them better?
So, I mean, I think there's a lot. I mean, I don't want to make fun of digital nomads. I mean, I kind of am. I don't know if I ever really was, but, you know, we all love Tim Ferriss and we all love the 4-hour work week, but we put a lot of time into this. You know, our advantage is that's where the roll-up comes into play. We have a team in place that has SOPs and the processes. We have people in China or in different markets. We have factories we buy from in India now, Thailand, China, US. We have the people in place, and then we also have the systems, and we also have money. I didn't really mention that reason to sell, but usually to get bigger on Amazon, you got to buy more. So you got to either finance it or something. So we make sure to pump money into inventory. We have, of course, capital and access to capital, because we love it when we see a seller that's just been running out of stock a lot. So we finance the inventory. We also try to add some variations to the listing, different colors or sizes to try to boost that sale. And those are things maybe the seller knew about, but they didn't want to finance that inventory.
So then when you do that, how much do you try to increase the business? How much do you try to grow it like in the first half a year or so? Can you double the revenue?
We have a case study that basically we try to double it in a year is our goal. So we have these good case studies. Well, I would say that's kind of our goal. We're still new, honestly. We're only like less than a year old. It depends on when you say the beginning is, but so far we're about 100% right now in the last year. So we know we can't get that lucky forever. We don't want to promise that, but we're trying to go for like 20, 30% growth yearly.
Yeah, that's pretty good. Yeah, we've had a pretty similar kind of structure. So we are trying to get a 100% return, and we've been successful in that so far in the past 15 or so years. Yeah, it's the content sites, but it's definitely different once you start to scale things up. So I'm honestly not sure if that's gonna hold. But the difference is we also invest a lot more effort into building our private deal flow, because I found that there is a huge difference. I don't know about FBA, but when it comes to content businesses, there is a huge difference between what you can get from brokers and what kind of deals you can find privately, mostly because there is just such a huge demand among buyers. So then you go with brokers, it's really difficult to find good deals. There are so many buyers who would just snap them up quickly. I wonder if that's the case with FBA businesses. Have you been able to buy some good deals before the other buyers and really go and quickly snap up some deals? Or what's your strategy in that?
Yeah, honestly, it's still only been a few months for me to be part in the team, and maybe that's something I'm helping with a little bit. But I think that would be true anywhere, whether it's FBA or content, if you can get your own deal flow, because you always worry with the brokers, are you going to get the first dibs? How are you going to get access to that or see opportunity? So I think that is critical, is to have more deal flow. Although if you look on our site now, we're not like a two-sided. We're mostly looking for raising investment money on the website. We have a sell your business page kind of hidden in the footer, but we've been overwhelmed. We talked to even some investors, and they even told us to focus on some conference calls. So for right now, we will look at it, but we're not actively seeking deal flow, because everything is a process, and everything takes a mindset and focus. So
yeah, we are sort of in a similar situation. We've had to reject so many investors recently just because we don't have the capacity to buy as many sites as the market kind of demands. So we are slowly building up the team, slowly building up the resources and everything, because it really it's kind of scaling. If you are managing 10 sites, that's one thing, but if you want to go and manage 20 sites, you pretty much need a lot more people. You need a much higher capacity, so that becomes a bit different. Absolutely. And yeah, I think that the trend in the industry as well is to try to go and get some bigger deals by bigger businesses, or try to combine some of those smaller ones to kind of combine several businesses in the same niche. I'm curious if you've been able to do something like that. By the way, if you have brands that are in the same niche, are you able to kind of promote them together, to run them together?
Yeah, one thing, it's still haven't been implemented. We talked to other sellers that have done it, is we bought some that don't have a brand, and then we have some that have a brand, and we put them together so that we can make a bigger brand.
Oh, that's nice.
Yeah, we've seen some opportunities in that. So that's definitely one opportunity. But for right now, I forgot. Literally, I was just talking to somebody the other day. They say if you wait to find everything to match, sometimes you can't match everything in a niche. You just kind of got to get the opportunities that are there. But of course, we've seen some that are somewhat similar, and we're trying to figure out how to either make a new super brand and then link them all together, or to take some that's a stronger brand and merge them. I'm not sure if you're familiar with Seller Central accounts and brand registry, but there's some back end, and you can kind of merge listings into different seller accounts. So we're kind of deciding how big does one seller account get before you go into another. How many listings, how many brands. So sometimes we buy a company, our brand, and it has a seller account, but we don't use that one, and we merge the product into another one. And we're just trying to figure that sweet spot of size of account and listings and brands.
Yeah.
We have 10 brands, and it's a lot to manage, content and all the different work you're doing. So maybe making it, I don't know about one super brand, but maybe you could bucket some of those, like you're saying, and find synergies.
Right.
by just having them all under one umbrella or a few umbrellas.
And how do you guys manage risks? So when it comes to content businesses, the biggest risk is usually with Google penalties. And, we've had some of those. And like we recently had a penalty on one of our businesses and it lost like 80% of the traffic. But then they were able to fix everything and the traffic came back mostly. And that's something that happens quite often. And in Amazon, I would imagine the risk is just getting some problems with your account. And I see quite a lot of cases where Amazon accounts get closed. Have you experienced something like that?
Yeah, so that's obviously probably a top question we get from investors, potential or current investors. So we're not hiding from Amazon that we have multiple Seller Central accounts. They know we have it, and we're at least not trying to do anything black hat purposely. There can be some unexpected issues where it could either be dirty with your competitors or it could be something you didn't even know, or Amazon pops out of nowhere, some weird update. It is a risk we've told our investors, but we don't want to just say that it's a risk. We're diversified a few Seller Central accounts. We have different brands, and there is a difference in Amazon between a brand and a seller account. A lot of people think of them as the same, but the seller doesn't have to be the brand owner. So you could have multiple sellers on one listing. Of course, we want private label and we want to own the listing, but worst case, there will be some inventory issues depending on how much stock you have in Amazon. But we're really investing in brand. That's why we want to have brand registry. We want to own the listing. But I guess my answer is we have multiple seller accounts. We have multiple brands. That's where we get less risk, because if you're one seller with one brand, like I was doing, last year, that's where you're more nervous. But you're bigger. Of course, it would be horrible if we lost a brand or we lost a seller account and inventory, but it wouldn't destroy us completely. So that's where bigger is better in scaling. And then, of course, we can have more resources to we don't have that yet, but we should have soon as we get bigger, like a full-time compliance kind of person that's like dealing with TOS. I'm sure we're going to have to deal with that as we get bigger. So that's kind of one of the advantages of having a bigger team.
All right, that makes sense. Well, thank you, Mike. So how can our listeners contact you or contact Alpha Rock Capital to learn more?
Sure. Basically, it's alpharockcapital.com. Hopefully that is an easy one to remember. And then that's the best place to find out about what we currently are, what we're currently raising. For me, I still am a blogger at Global from Asia. You were on the show. It was great to have you as a guest. That's more about cross-border e-commerce and Asia, Amazon business. So those are the two best places.
Well, thank you, Mike. Pleasure to talk to you. Until next time.
Thanks so much, Michael.
Domain Magnate is a leader in buying and selling online businesses with a proven track record of expertise gained from over 300 deals since 2004. To learn more about how we can help you acquire or exit a profitable online business today, head over to domainmagnate.com for more details.